And earnings season has kicked off and TCS has reported third quarter numbers largely in line with estimates. Dollar revenue declined by nearly 2% in what is a seasonally weak quarter. Deal wins crossed $10 billion and the company's order book is at its highest level in 5 years. TCS also promised more campus hiring this year, even as net headcount declines sequentially. Reema Tendulkar is here with the TCS Q3 report card.
Revenue miss, margin in line and strong deal wins. That's the summary of TCS's Q3 numbers. The company's top-line dollar revenue growth has declined by 1.7% on a quarter-on-quarter basis, lower than street expectations of a 0.6% decline. Constant currency revenue growth was absolutely flat. This was an account of furloughs that we've seen, which typically happens in Q3, and plus there was some client-specific issues which impacted them in Q2 in life sciences and healthcare, and that persisted even in Q3. Margin performance was healthy. The company's margins expanded by 40 basis points to 24.5%, and that led to a 4% increase in the company's profitability. The key positive was the deal wins. Deal wins for the company was hovering between $8 to $9 billion, but this quarter, and it's a seasonally weak quarter, deal wins shot up to $10.2 billion, expanding by nearly 25% on a quarter-on-quarter basis. In North America, deal wins particularly was strong, and they went up 40% on a year-on-year basis. Attrition was at 13%. The net headcount after declined by a little more than 5,000 employees on a sequential basis, and this comes after 2 strong quarters of a headcount addition. There is a normal dividend of 10 rupees and a special dividend of 66 rupees. But while the numbers were muted, at least on the top line, the management commentary was far more upbeat. They're talking about discretionary spending reviving in verticals, which makes them optimistic going into the next year, particularly in BFSI and retail. So the management commentary is fairly optimistic. The quarters were lackluster. The quarter performance was lackluster, but the management a little more optimistic than before.